Hello, everyone. It's Stephen Whiteside here from theuptrend.com with this weekend's edition of Protect Your Portfolio. Well, we certainly had a disturbance in the force on Friday that everybody noticed. Coming into Friday's trading action, we did see some choppy action this week. We had a bearish reversal day on Tuesday. We had another one on Thursday. And with the Thursday's bearish reversal day, we did see a lot of new sell signals. Now, if you were with us back in June, we talked about that there was a strong seasonal tendency for the stock market to move up in the month of July. And we had a lot of historic trades, which started at the end of June into July and then ended towards the end of July. So there's a nice one. You buy on July 1st, the NASDAQ, you sell on July 31st. And that would have been a nice trade to take. So we've talked about those, seasonal tendencies back in June. We also talked about the fact that the VIX usually bottoms towards the third week of July and then starts heading up, and it usually trends up towards the middle of October. So that is a strong seasonal tendency. Of course, these are just averages. They're not exact dates. So, we were expecting the market to end its summer rally sometimes towards the end of July. And it looks like that happened on the first day of August. So you can see looking at the Dow that we were down enough on Thursday to generate a sell signal, saw fall through to the downside on Friday, and we actually gapped lower, which is something the Dow doesn't often do, just because the way it's constructed. Now, the Dow ended the day down 542 points. A lot of people attribute that to the bad employment numbers that came out. But in reality, if you look at what the market was doing, it was selling off from Thursday's close into Friday's open. In fact, when the economic numbers came out at 8:30, I he's reading the jobs report over here, and you can see that the Dow is down 424 points at that time. So the fact that it closed down 542 points, you can see that the market was quite bearish going into those jobs numbers that came out on Friday. So yeah, the headlines point to the job numbers being responsible for the market dropping, but it had a lot more to do with earnings that came out on Thursday than what happened on Friday. Now, we don't have any major weekly sell signals this week, but we do have a whole bunch of new daily sell signals. And here's the Magnificent 7 ETF. It is back on a daily sell signal as of Friday's close. Now, Apple was already on a daily sell signal as of Wednesday's close and had a big down day on Friday. We saw Amazon make a new high on Thursday and then gap lower on Friday. Looking at Alphabet, we needed to close below $190.13. We closed at $189.95. So we're back on a sell signal as of Friday's close. Now, what's still holding up? Well, we've got Meta still on a buy signal here. It popped on Thursday, gapping higher on earnings and then started to come down on Friday. I certainly wouldn't have chased a Meta up on Thursday. Then we had Microsoft making a new high on Thursday, pulling back on Friday, still on a buy signal. And then we've got NVIDIA still on a buy signal. So you can see that not everything is broken on a short-term basis. We need to close on Monday below $171.93 to give us a new sell signal for NVIDIA. Now, Tesla came in to Friday's trading action already on a sell signal, and you can see that Tesla peaked back in May, made a lower high in June, made a lower high in July, and now we're coming into August, and we previously talked about the fact that Tesla had worked itself into a nice triangle, and it looks like it's starting to break down below the bottom of that triangle. Now, we've got Broadcom, so there's two stocks that we follow in addition to the Magnificent Seven. Broadcom being one of them. We're looking for a close below $285.81 to give us a sell signal on Monday. And then we've got Shopify, unfortunately, back on a sell signal as of Friday's close. So we still have Meta, Microsoft, and NVIDIA are still on buy signals here, and we also have Broadcom on a buy signal. So not everything broke down on Friday. Now, continuing with daily charts, looking at the TSX, it certainly rolled over on Friday. down just 239 points, so not that big of a sell-off. And of course, this is the first sell signal since the start of the rally back in April. Now, when we look at the Canadian market, it's not the big cap tech stocks we have to worry about. It's the big cap bank stocks we have to worry about. And coming into Friday's trading action, we had Bank of Montreal already on a sell signal. Now we've got the Bank of Nova Scotia on a sell signal. We needed to close below 76.59. We closed at 76.53. Then we've got CIBC already on a sell signal, no change in trend there. Then looking at the National Bank, we're still looking for a close below $143.03. We closed at $143.40. Then we already had Royal Bank on a sell signal, leading the bank sector lower. Did recover quite a bit of its losses on Friday and was only down 31 cents, but it's still on a sell signal. And then there's the TD Bank on a sell signal as of Friday's close. Now, once again, as we were looking at the US market, in the Canadian market, not every stock broke down on Friday. Now, looking at the fear index, fear is rising, and that, of course, is negative for stocks. We had the VIX end Thursday on a buy signal. We saw a fall through to the upside on Friday. We did break through the midterm tether line, so that was the second level of fear. We haven't broken through the water line just yet. Still waiting for that to happen. And we did poke our head above the top of the flypaper channel, but we haven't broken out from it just yet. And then, of course, looking at the weekly chart, we did trade up to the upper channel line, but did not close above it. So we are going to still remain long-term bullish on the market as long as the VIX does not break out above 21.99. Now, we can remain bullish on the market. That doesn't mean we can't take money off the table and wait and see how long this move to the downside, how long it lasts, and how far it goes. Yeah, looking at the weekly charts, and we'll start off in the US market. And before we actually get to the charts, let's look at a couple of tables. First of all, here's how things worked out this week in percentage terms, and it was the microcap stocks down 5.44% were the big losers. And then the area that held up the best is the semiconductors. And I don't know if you can hear my dog dreaming in the background there, but she's just starting to make some noises. It was down 1.23%. So we saw that in NVIDIA, Broadcom still holding up. They were down on the week, but not enough to generate daily sell signals. Now, looking at our rankings, typically when a stock is up at 8, 9, 10, that's overbought, and we're looking for selling opportunities. You look for buying opportunities when they're ranked 0, 1, 2, and they start to move up. And so we don't have any 10s in this list. We do have some 5, 6s, and 7s. The energy sector is ranked a 5 at the moment. And of course, the energy sector has been coming up off the bottom. And so it's working its way higher while the rest of the areas that we're following are actually moving down at the moment. Gold's still holding up and semiconductors are still holding up fairly well. Now, there's the microcaps down over 5%. And of course, when you see microcaps moving lower, that's the risk off trade. When people start just selling off the microcap stocks, they are in a broad range of sectors. They are really, unloading things that have the greatest risk, and that's a bearish sign for the stock market going forward. As you can see, we haven't generated a sell signal just yet. Then looking at the semiconductors, they were down on the week, did not close below the previous week's low, so they're still holding up fairly well. The market apparently still loves semiconductors. Looking at the Vanguard Total Market ETF, we did close below the previous week's low. It was a bearish reversal week, and we have a new early warning signal on the weekly panic zone chart. So all of those are very bearish. And we were trying to break through 312.50. We've got stuck there for the past 2 weeks, and then we pulled back. So that may be the top for this particular move in the market. You can see that there's a lot of support along the next price target of 296.88. And if you can round that up to 300, you've got an area of support there that may hold us up going down. So we'll have to see if that holds. If it doesn't hold, then what about 281.25 in this nice open gap over here? That could certainly be the next target to the downside, but we haven't broken support just yet. Looking at the Dow Diamonds, now this is interesting. We have not been able to break out above the highs from late 2024, and now we're coming back into the channel, and we certainly closed below the previous week's low. Now, unlike the Dow, the S&P 500 has been able to break out above the highs from early 2025. Unfortunately, we haven't been able to break away from the 625 level just yet, and we came back and closed just below it. There's all kinds of potential support here around the $600 level. If that breaks, then look down for a move down to 562.50, and you can see there's a nice open gap over there that could potentially act as a price target moving lower. Now, the NASDAQ 100 has a similar situation. We tried to break away from the 562.50 level, and now we're coming back down. Of course, the big round number is 500 down here. To get there, we've got to break through the highs from late 2024 and early 2025. If we do that, there's a nice open gap below the $500 level that could potentially act as a price target. Now, in 2025, the broader market has underperformed those indices, such as the Dow, the S&P 500, the Nasdaq, that have those big cap tech stocks, and most of those big cap tech stocks have some AI component to them. If we look at the broader market, you can see the Russell 2000 has not got anywhere near the highs that we saw back in late 2024. And now we're trading back into the channel looking for a close this coming Friday below $210.14. And we've got stuck trying to break out above 225. Now we're trying to hold 212.50. If that breaks, then $200 would be our next target to the downside. Small cap stocks again underperformed and have got nowhere near the highs from 2024. And so here we are looking for a close this coming Friday below $231.54. Then looking at the energy sector, which has really underperformed in 2025, is still on a buy signal here. It's been in the channel for the past few weeks, and we're looking for a close this coming Friday below $84.08. Then looking at financials are back in the channel, so a close below $50.70 would give us a sell signal this coming Friday. We tried to break out above the 53.13 level, have not been able to do that so far, and we'll have to see if $50 can act as support. There's U.S. banks trading down to the lower channel line, but not closing below it, so looking for a close below $54.24 this coming Friday. And then looking at gold stocks held up fairly well, down 2.8%. But remember, the gold sector is much more volatile than the rest of the market. So that's not a big move down for the gold sector. For the GDX, we're looking for a close this coming Friday below $50.16. Now, moving on to the Canadian market, and in percentage terms, we didn't get hit as hard as the US did. The Venture Exchange did lead the market lower, down nearly 5%, while the energy sector held up fairly well, down a little over just 0.5% on the week. Now, when we look at our rankings, you can see we've got a bunch of nines here, which we don't have in the US market. We don't have as many nines, and nothing's really broken down here. The energy sector is currently ranked a 7. Looking at the Venture Exchange, that was the big loser. Again, it's the risk-off trade. It's not a good sign for the stock market when the microcap stocks lead the market lower. That means people are getting very defensive, just like when you see the VIX start to rise and you see microcap stocks start to sell off. That's a bad sign for the market going forward. Now, the energy sector was the area that held up the best at closing in the channel, so that's the neutral zone. Certainly, we could see a sell signal this week if we closed below $16.79. Now, looking at the iShares for the TSX 60, there's the early warning signal up there. There's the bearish reversal week, and we closed below the previous week's low. So we're still closing above the upper channel line, but we could certainly see a sell signal if we get the same type of follow through to the downside this week. Now, we were trying to get to 42.19, but here we are back at the 40.63 level, and we closed at $40.69, so just above that level. 39.06 was our big area of resistance back in 2024 and into early 2025, so That would be a major area of support if we continue to move lower from here. Looking at the Vanguard Canada ETF, again, there's a mathematical possibility of sell signal this coming Friday with a close below $53.99. We got to 56.25, so congratulations if you had an order in up there. It got filled and you are locking in some profits, so good move. Looking at the rest of the world outside of Canada, we were down 2.06% on the week, hitting the upper channel line. Close this coming Friday below $45.31 would give us a sell signal. There is the small cap ETF hitting the upper channel line. So close this Friday below $22.81 would give us a sell signal. Energy stocks treading water here. We've been in the channel for the past few weeks. Close below $16.79 would give us a sell signal this coming Friday. Then looking at the financials, traded down to the upper channel line, a close below 63.43 would give us a sell signal this coming Friday. We've got the bank stocks holding up even better than the financials, and we did hit the 46.88 level over the past couple of weeks, so you got to lock in some profits there. Inside week for the global gold ETF, so no change in trend there. And then tech stocks. Tech stocks ran up to the high from the start of 2025 and quickly reversed and closing below the $75 level. So if you had an order in at $75, it got filled, and now we're closing at 73.31. So congratulations for filling that, getting those orders filled. We're almost done here. Looking at the price of crude oil, it was actually up on the week, even though energy stocks had a hard time. At the same time, crude oil was up. Natural gas continued to move lower. Now, copper had a huge down week this week. Remember, copper popped the other week on news of Trump's tariffs, and then we started to sell off, but we came down sharply. So here we are trading back at a level we haven't seen since the start of the year. And we haven't made new lows for 2025, but that is a huge loss. So, there's some unwinding because Trump reversed some of his copper tariffs. At the same time, if is the global economic barometer, then it's not going in the right direction. The price of gold ended the week up $7.30, so no change in trend there, even though we started to trade below the lower channel line. A pullback for platinum this week. We're still on a weekly buy signal, and a pullback for silver, and we're still on a weekly buy signal. And we'll finish off with just two more charts. They're monthly charts, but you've probably heard a lot about or experienced the price of beef rising sharply this summer, and it's been on a rise for the last year or so. If we go back to 2018, probably the average price over that time period was about $170, and here we are up over 220. So quite a nice move up over the past year, and that's why beef prices are up in the supermarket. Compare that to pork prices. Pork prices pretty stable this year, and if you're going to be eating ribs, you're probably going to be eating pork ribs. Unless you're trying to keep kosher, it's going to be very difficult this year or very expensive, however you put it. Okay, folks, that's all for this weekend's presentation. There was a disturbance in the force on Friday. We have sell signals in some of the major stocks on both sides of the border from Friday's trading action. We'll have to look and see if we get fall through to the downside. This is the time and place where we look for the summer rally to come to an end. We've got the VIX moving up. We've got microcap stocks being sold off. And so I would not be surprised if the market continued to move lower from here. Enjoy the rest of your day. Enjoy the rest of your weekend. It's a long weekend in parts of Canada this weekend, and I'm not going to be doing a video on Monday. We will be doing charts Monday night. Just because of the market's activity on Friday, we're going to have somebody stay back and do charts on Monday night, but there won't be any videos until next weekend.